So let's welcome our technical experts and understand from them that what they are doing in this market. We have Manav and Manav Chopra joining us at this point of time. Very good morning to you, gentlemen. Manas, markets are doing great. Bank Nifty is leading from the front, and as I see your stock, you are more bullish on banking space and financial space. Mammoth name, SDFC Bank. That's a stock on a breakout and a runaway rally. And why are you buying Indiabulls Housing Finance?
Good morning, everyone. Siddharth, I am very much bullish on Bank Nifty because looking at the breakout, what we have seen just 2 days back in Bank Nifty, I believe that Bank Nifty has potential to give around 7-8% up move even from current levels. So SDFC Bank, because stock is clearly making higher tops and higher bottoms, I think 2 days back it gave a breakout about 22.90. And even on the long-term charts, looking at the breakout, what we have seen just I think last week, I think the target comes to maybe 2,500 positionally in SDFC Bank. So even for short term, I think looking at the breakout, I believe that the stock has potential to test 2370. So take a long position here and keep your stop loss below 2265. Secondly, the buy on Indiabulls Housing Finance, where the trend is very clear now because stock has started making higher tops and higher bottoms. We saw some consolidation, I think, in last 4-5 trading sessions, but again, the rally has resumed on Wednesday with the higher volumes. So I believe that this rally will continue and the stock can at least test 765. So take a long position here, keep the stop loss below 714. However, the target of the short term on the short term charts comes near to around 820 to 840.
Okay, and Manav, you two are playing on same theme, bank and financials, but from banking space you're going with PSU Bank, and why not a lot of long positions over there? And that news related to arrest of Nirav Modi in London, that also gave some fillip to at least to PNB. What are your observations when it comes to Union Bank and CANFINHOME Finance?
If you're looking at the price pattern for the PSU index, we have seen a breakout from its important accumulation pattern, and I think going forward the PSU bank index would definitely outperform, and it has already seen a good breakout at least on the weekly front. So from the PSU stocks, I think Union Bank is one stock which is standing out currently because the risk reward ratio still is quite positive, and if you're seeing on the weekly time frame, there has been a fresh breakout on the momentum. Usually whenever there has been a fresh breakout in the Union Bank in the past, that momentum has carried for another 7-8% on the upside. So keeping that play in the picture, and since the risk reward ratio is already favorable, so on the immediate basis, 87 is a very important support, and we recommend a buy into this. A stop loss would be at 86 on the lower side for an upside target of 94. CANFINHOME in fact has seen a very good rally already from its recent lows, but the short-term consolidation breakout that it witnessed previous trading session is indicating that it has more room on the upside. Basically it's a flat breakout, and usually such formation leads to at least a good momentum rally, at least in the near-term perspective. There has been very good volume which has been witnessed in CANFINHOME in last couple of trading session, and also the delivery volume was quite high. I sense at least in the near term this is a very good setup for a bet for at least 3 to 4 trading sessions. A stop loss of 312 in CANFINHOME can be placed on the lower side, and we expect higher targets of 355.
Alright, let's focus in on individual stocks as well that will be in news. We saw that mega fundraise that took place for Vodafone Idea, 25,000 crore rupee rights issue. Well, brokerages have come out with their verdict on how they're assessing the latest fundraise, and Pankaj joins in with the snapshot of what they have to say. Pankaj.
So, mixed reaction as far as the fundraising is concerned. Remember, it's a big fundraising that we're talking about, 25,000 odd crores, and that's a big one coming in from rights issue. 12 rupees 50 paisa is the price per share, and brokerages have reacted to that. That rights issue will lead to a good discount to the current market price. Fundraising may be followed by some sale of their core tower assets, so that could be the next thing. But definitely in the near term, it will reduce the leverage as far as Vodafone Idea is concerned. The stock, you can see, on Friday was up 3%, but that's not the correct way to look at it. Before going into the meet, or just when the meeting outcome was announced, the stock was down about 5-6%, so it's recovered almost about 10% from there. Mixed reaction from brokerages. Nobody has changed their EPS. They have spoken about a big dilution, but at the same time, they've also spoken about promoter commitment and what essentially this does to the debt of the company. Remember, it's a slightly heavy in terms of debt company, and that's why this fund infusion was needed, so that the debt to equity ratio can come down meaningfully.
All right, Pankaj, thanks a lot for that. Well, let's also focus in once again on Jet Airways. Looks like there is the Tata Group that seems to be once again evaluating jet slots, routes, parking slots, as well as landing rights. That's what sources suggest. And in fact, Tata Group may initially be offering to take over its unutilized routes and slots in larger consumer interest. They're going to be citing surging airfares as a reason and offer to start with unutilized capacity. Nayantara Rai picks up these details from her sources. Nayantara.
ET now exclusively learns from sources that the Tata Group is at an initial stage and is evaluating the possibility of taking over the bankrupt Jet Airways parking slots, landing rights, as well as routes. I'd like to caveat this is all at an initial stage. It may fructify, it may not fructify. In the past, also Tatas have been linked with Jet. Never worked out, but the reason Jet is once again looking at the possibility and this piecemeal approach towards Jet is because just last week Vistara got a permission from the government of India to fly overseas. That international permit came as recently as last week, and that's why that is why Tata Group is once again looking at all of this. ET now learns about Tata Group's initial interest I should add, on the same day that the government of India, via the aviation secretary, said there is a thought process of letting other airlines use unutilized capacity of Jet Airways, the fleet, the routes, the parking slots, the landing rights. So we are being told by our sources that the Tata Group decide to go ahead with this. Its first offer to the government and to the lenders of Jet could very well be to take over the unutilized capacity in larger public interest. We've all seen those airfare surge, skyrocket almost 100% year on year, 60% from last month, ever since Jet started grounding its flights. Then you've had the Boeing crisis, you have the Indigo pilot shortage, so that could very well be cited. And this is in the realm of speculation. If the Tata Group is interested, why shouldn't other airlines be? This could also be an opportunity for Indigo as well as SpiceJet. Having said that, I did reach out to Tata Group for their detailed questionnaire, and Tata Sons replied saying they do not, as a policy, comment on market speculation. But the big headline being that all of this, the Tata Group is basically an initial stage for Vistara, looking at Jet's very lucrative routes, parking slots, landing rights. It has a lion's share in Delhi and Bombay Airport, even at London Heathrow, and you are allowed to actually trade slots in London Heathrow among airlines. That is being considered because Jet has that.
Thanks very much, Nayantara, for giving us the latest details. Moving on then, let's keep it with aviation, but talk a little bit about the domestic air passenger growth. That has certainly lost the high of the double-digit growth momentum that we had seen, and now it's at a 53-month low. But what exactly is the market share breakup and who is dominating? Pranay has the details. Pranay.
Yes, Aman, the air traffic growth in Feb has actually moderated from the highs that we've seen earlier in the year, and the capacity addition has actually been exceeding the demand growth. So in the month of Feb, you saw traffic growth of just about 5.6% on the civilian lines, and thanks to the aircraft grounding issue, primarily at Jet Airways, Indigo has managed to increase its market share by over 300 basis points year on year. So now it stands at about 43.4%. SpiceJet also has leapfrogged ahead of Air India and is now in second position if you look at Air India on a standalone basis. So that's at about 13.7%, while Jet Air has plummeted to about 11.4% of the market share. As things stand now, about 50% of its fleet has been grounded. So these kind of issues are expected to continue for Jet, where it is losing money as well as flights. Add to that the pain of refunds, which is going to shoot through the roof and is really going to take it to the brink right now. If you look at Indigo's market share, most of the incremental capacity is now being deployed on the international side, where revenues are a little more lucrative. Market share has risen for them on the international side to 20%, and on the domestic side, interestingly, it moderated to about 15% in terms of the growth that they saw in Feb. Also, one more thing is that if the demand continues to stay low, because right now airlines are trading demand for higher fares and yields, as you know, have risen dramatically, and with this kind of capacity constraints, it's expected to remain strong. So Q4, which is generally a weak quarter for the airlines, this time is going to be very strong on the profitability, primarily for Indigo and second for SpiceJet.
because of higher yields. Capacity remains a bit of a constraint, and demand also growth has softened because of the higher fares.
All right, Pranay, thanks a lot for that. Well, meantime, from aviation to autos, we have a very interesting lines between Toyota and Suzuki. Ajay Sharma joins in now to give us a gist of what brokerages are saying about the alliance. For now, Ajay, I think Toyota is going to be getting more products, but I think nevertheless, brokerages do like the synergies.
Well, that's correct. This is a very important alliance which is taking shape. It was announced last year, but now details, both Suzuki as well as Toyota globally have shared the details. Well, Suzuki's largest asset globally is actually Maruti. So this is a win-win for Toyota as well as Maruti. For Maruti, of course, they get a very high-tech technology know-how from Toyota, which have much more advanced and sophisticated vehicles. And of course, Maruti will be supplying their Brezza, Ertiga, Ciaz to key export markets like Africa. So Toyota will be marketing these products in the other global market. Of course, there will also be a co-development of a mid-level MPV. If you see Toyota's top level or most hit product is actually Toyota Innova Cresta and the Innova range. For years it has dominated, whereas Ertiga is actually a mid-size MPV. So Suzuki and Toyota jointly will be developing a mid-tier MPV. There are a lot of expectations and hopes of a very high-end product over there, because there is a demand around that particular type of vehicle. So it will be very interesting how the entire product line of the partnership takes shape, how it impacts the competitive environment, and what kind of high advanced products Maruti is able to do. But up till now, Maruti has only done mass products, not very high-tech products. So with Toyota, that technology moves in. So brokerages are generally positive on this development.
Oh yes, indeed. As Citi is saying, it's the top sectoral pick, and they've got a target of 8,300. Well, for now, we take a short break. Do stay with us. Lots more to chat about when we return. Get in some fundamental market perspective as well as dissect individual stocks in news.
Well, let show you the AMC of the month coming up, and today we'll be interacting with the fund managers and the CEO and the head of equities of Birla Sun Life AMC to understand where they are finding value and what their market view is. But what I want to extensively discuss today with Sandeep Sabharwal is this very unique data about where the P multiples of the mid and small cap indices are. And I won't like to use the word once upon a time, because this was only Jan 2018 or December 2017 when the P multiple of the small and the mid cap indices were much higher than that of the Nifty. But the Humpty Dumpty has come tumbling down. The small and the mid cap indices are no longer trading at those lofty P multiples. Data points will just come up on your screen, and now the mid cap index is trading at a discount to Nifty 50. Okay, I've been told that the data is not ready, but Sandeep, I think should we ignore this fact that there was a Humpty Dumpty in the small and the mid cap space in 2018? The Humpty Dumpty has come tumbling down, and now it's time to perhaps revisit that Humpty Dumpty.
Yes, so typically what happens is that when mid caps go into 20% overvaluation over large caps, that's the time they peak out, because in euphoria that happens. Then that although they should never ideally go into premium to large caps, given the fact that large caps have a much more durable structure of business.
Better return ratios, better managed. I mean, everything's good about them. That's the reason why they're large.
Yeah, so volatility of business is lower. So, but in euphoria it happens. Then in despair, typically they go down 30% below large cap valuations, and that becomes the buyer trigger. So I'm not really sure whether it went 30% below large cap valuation or not this time. But then that's typically the way you try to evaluate that. But that's not very relevant, because what happens in the index structure is that a few stocks distort the valuations of the entire index. So a few stocks with a very large weightage might be at a high PE, and that can distort the entire structure. But the overall broader market still remains pretty cheap. So I think that's how people should evaluate.
I'll talk stocks. Vodafone Idea. We can argue about the future of telecom is not looking all that bright, and you still have a missed call problem there. But the positioning of the right issue is at a fat discount to the current market price. So for a first time for a new buyer, does it make sense to acquire idea at 30 rupees with the assumption that you'll get the right issue at 12.5 rupees, which means your average cost of idea comes down dramatically? Is it a good time to buy idea at that level?
I don't think so, because business fundamentals are still not supportive. And see, if it was a question of mending the balance sheet and not having to do large capex, then I would argue that yes, that's the case. But the unfortunate part of the telecom business is that they still need to do too much capex, and that, when the revenues are falling, you don't have margins, and then you have to do capex also just to sustain your market share or reduce the pace of reduction of market share. Then the business is not a great business. So I don't think that there is any big case to buy this stock.
Even if you see the subscription numbers, actually Vodafone Idea is losing compared to Bharti, which is stable, and let's not discuss about Jio, which is adding a lot. So mathematics say that the price of Idea would be somewhere around 18-19 bucks after the rights issue. So much of infusion of capital also reduces the earnings in per share. So there's absolutely no sense in buying at that 18-19 rupees, or you think Bharti is a better idea?
Because earning per share will come in when there is some earning. So there is no earning actually. They are just making losses. And given the capital expenditure intensity, I think that's what people have to focus on, cash flows. So if the cash flows, operational cash flows still remain negative, then how will the company's business sustain actually? Even Bharti, although it's managed its balance sheet relatively better, but it's also in a tough position, but then it has some other assets to monetize which could get it through. So relatively Bharti is better placed, but overall there is no big story neither.
What a divergent or contrasting stories playing out in aviation. Just on Wednesday's move, we saw SpiceJet as well as Interglobe Aviation rally quite smartly. With this disruption in Jet Airways right now, no resolution being seen as of now, do you think that there is a good chance that some of the other aviation companies may gain more market share? We saw the data as well that came out.
They are already gaining market share, because typically Jet might still be operating on 50% capacity, but then whoever wants to travel, especially in the festival season, holiday season which is coming, they don't want to have last minute cancellations. So to that extent these companies will obviously benefit at this stage. Now the bigger move, if at all, has to happen in some of these stocks will depend on whether the resolution happens or not. And like the SBI chairman has rightly said, in a service industry where they actually don't own any assets, because all these aeroplanes are leased, so their actual assets are very small. So if it goes into insolvency, then the airline is virtually over. So to that context, a resolution, so they are trying to work on a resolution. The base case should be that some resolution will be found. So if that happens, then I think given Jet's brand image as well as customer satisfaction indices, etc., they can come back very fast. So I think that's something we need to watch out for, and we'll get to know by 1st of April.
Yeah, they need to pay the pilots, I think, before everything else. All right. Well, Jet Airways, Indigo is going to be two of those stocks that we're going to watch out for when trade opens. But what else will we be keeping our eye out on? Pankaj Podar joins in with a list of all those stocks. Pankaj.
Well, thanks for that, Mobina. If you just look at aviation, that's a pack which has been in focus, and that continues to be the space. A lot of news flow around Jet Airways. First, of course, is what you all were discussing about the market share data, how that has changed and who has benefited with this capacity issues, and what has been the total number. However, there is a Jet lender meet today also. This is to decide Goel's fate, so that's going to be an important one. Of course, this has been a stock which is in focus, but everyday incremental news flow is something which the markets are latching on to. Then you have another ET Now exclusive story regarding Jet Airways, which talks about Tata's evaluating once again jet slots, routes, etc. Mind you, this is a source-based story. Earlier also these reports have come, but these now we can confirm are re-evaluating these sort of bid once again. Then we come down to the pharma pack and the auto pack. So let's start with that as well. Mindtree and L&T has been a developing story. There was a board meet of Mindtree on 20th of March, which could not conclude. So 26th is when they again meet. So let's see what comes out of there and how markets read into it. Dr. Reddy's has got an approval. Remember, it's a temporary approval or a tentative approval as they call in the FDA manner. Not much of an impact, but definitely an incremental positive news. And last one is on Bajaj Auto, where you're getting reports that they may be looking to sell out the KTM stake to earlier promoters. It could be valued around 1,000-1,200 crores, which for the overall Bajaj market cap is not pretty significant, but nevertheless, it's divergence from its non-core business.
Thanks very much for highlighting all of those top 5 stocks to keep an eye out on in trade today. Well, let's get you some interesting data crunching that we've done. India's biggest cricketing event, that's IPL, that kicks off its 12th edition starting tomorrow. And this tournament is set to roll with the defending champion CSK hosting the Royal Challengers Bangalore. It's going to be 12 matches played across the first 2-week period in the 8 home venues for all the franchises. All the teams will be playing a minimum of 4 matches except for the Delhi Capitals and Royal Challengers Bangalore, who will be both playing 5 games each. But we at ET now want to get you some data in terms of highlighting the listed entities which could potentially be impacted on the back of IPL. First up, Tata Motors. IPL has signed them as the official partner for the next 3 years, so that's going to be a stock that's going to be in focus. Everyone knows this, Mumbai Indians, they are owned by Reliance Industries, so that is going to be another stock that will see some sort of focus. GMR, JSW Sports, they've inked that 50-50 partnership to get over the Delhi Daredevils. It's interesting to see even some of the other partnerships for Sunrisers Hyderabad as well. There's Nerolac, which has the sponsorship. You have a 3-year deal, CSK, that they have inked with the Muthoot Group. Gulf Oil, Equitas, HIL, they are some of the sponsors for the Chennai Super Kings as well. I don't know who you're rooting for, Nikunj, this time around.
Good cricket.
Good cricket, that's just it. So not going for the Mumbai Indians.
No, it just, you loyal because you live in Mumbai.
Yeah.
But when you go for IPL, you just go to have good fun. That's my theory. And I, of course, go for the experience.
Yeah.
You go as a family, so it's always good fun. My son says he loves the stadium, whole setup there. So that's much more, engaging for us. But good cricket.
Absolutely. Sandeep, do you concur with that? Do you have any favorites when it comes to IPL? Only tennis.
Only doesn't watch cricket.
Yeah, so I won't talk to you about, Mumbai Indians and Reliance Industries, but Reliance Industries in general. How are you reading into the latest developments here?
So Reliance Industries, in terms of the core business, obviously refining is under pressure. So I think that's something which people will watch out for. But the other growth drivers, both in terms of Jio and retail, are doing well. And the fact that Reliance now will not have to spend the amount which it was paying to Reliance Communications, which it was a huge amount, which was sort of a bailout of sorts, is also a positive development. Overall, Reliance looks well placed in the bull market. I think it will continue to do well.
Okay, let's take some mid-cap ideas now because we are seeing a lot of interactions or a lot of traction in mid-cap space. And Manas, coming to you first, what are you suggesting at this point of time?
We are looking at the strength in most of the PSU banking names. I think one can definitely look at Oriental Bank, because here the trend is very clear now. Stock has been making higher tops and higher bottoms on the level of around 80 rupees. I think this week it gave a breakout above 101 on the weekly chart, and this is a confirmation of higher tops and higher bottoms on the medium term charts. So I believe that this rally will continue and Oriental Bank can test 116. So take a long position here and keep your stop loss below 104.
Okay. Kunal is with us. Kunal, NBFC space is doing well. We spoke to Manav as well, and he's also quite optimistic on CANFINHOME Finance. Can you elaborate reasons why you guys are so optimistic?
So stocks at multi-month, multi-week breakouts on short-term charts, crossing the 200 moving average, volumes moving in sync. I think all in all, these are very strong indicators or strong indicators of a trend in the making. CANFINHOME is no exception into this space. We've been bullish into the financial services space overall since last few weeks, but I believe CANFINHOME still has that additional bit of rally still left. I think the stock is staging a fresh bullish flag pattern breakout, more visible on the hourly charts as well. So a short-term target of 340 plus on CANFINHOME, suggesting a buy with stop loss at 318.
Those are two mid-cap ideas from Manas and Kunal. Manav, generally we take a mid-cap idea, but since you have given a large-cap name Infosys as a buy call, let's discuss Infosys and your overall view on NIFTY IT.
Yes, in fact, since last few months, NIFTY IT has been on a sideways consolidation, and usually this formation is seen after a good rally, and the undertone for the NIFTY IT still remains bullish. Specifically, when we talk about Infosys, there has been a corrective decline from its recent peak of 770, and the prices have formed a short-term bottom close to the levels of 710. I sense the short-term correction is over, and eventually in the near-term perspective, we expect the specific stocks to see a good outperformance. In fact, Infosys has also breached a short-term trend line breakout on the upside. So the evidence is suggesting from here on you would see a good upside momentum, and in fact there has been a good weekly close. So I think keeping the volumes picture and the momentum in play, we expect Infosys to see a good outperformance. In the near-term perspective, 725 could be a stop loss on the lower side, and we expect higher targets of 765 to be achieved.
All right, Manav, let you go on that note. Thanks very much then for joining in with your technical perspective. Sandeep, what about two-wheelers? The view now is that things are turning rough. The margins could take a hit. We've seen 2 rounds of cost price increases. Are you cautious here?
Yes, so near term we have to be cautious because current month numbers might be disappointing. But longer term, in any large cap phase of slower growth, which could be temporary, and margin pressures which could also be temporary, are opportunity to buy for long-term investors. So I'm looking at this space, which has been an underperforming space, more as something we'll be looking to buy into rather than sell at this price for maybe a 5-10% decline potentially at the maximum. So that's the perspective with which people should look at it, because going forward post elections or as the wedding season etc. starts, we will see a demand come back.
Auto space, I never thought Maruti and Toyota would join hands. Is it a sign of that they are not confident of growth and that's why I want to use synergies?
No, Toyota is the world's largest auto company, and Suzuki also is in a fine position. So I don't think financially there is some kind of a distress which will warrant this. This could be technology, and this could be a lot of other aspects where they want to do synergy advantages. So Maruti at the entry level I think has got a great market share. Toyota at the entry and the premium market level I think is a very comfortable brand. So both these brands I think are great brands. I mean, it's unfortunate that we may say that we are Indians but we love Japanese cars. I mean, the Indians per se, we don't like. Tata Motors has done nothing well. The other Indian companies which have tried their hand in the auto segment, they've not done very well. But I'll tell you what, I genuinely feel, Sandeep, that every brokerage I've spoken to, they are undermining the importance of the emission norms. Emission norms are here, and emission norms are coming at a time when the sales have plummeted, which means that you'll be forced to give more discounts. If you're giving more discounts, you will actually see a inventory to clear the inventory. The margins in next 2 quarters may not be that great.
No, not really actually, because the emission norms kick in 1st April 2020.
So you'll have to clear the backlog.
No, but because of the fact that most vehicle prices will go up by 5 to 15%, there will actually be a lot of pre-buying. So I think it's just this slow growth phase could be just a 1 to 3 month phenomena from this point of time. I mean, the 6 months leading up to December 2019 or Jan 2020 will see significant pre-buying of vehicles, because most people will not want to pay 8 to 10% for the same vehicle actually, because for a consumer it doesn't matter whether it's BS6 or BS4. So it doesn't matter to him. So actually we should not be so negative, and especially the petrol car companies, because petrol will become a bigger and bigger part under the new emission norms. So I think petrol vehicles or electric, as and when they become big enough, will be the bigger beneficiaries.
Okay, we've got Mukul Kochhar also joining us this morning. Let's welcome him in as well. And he's, of course, head of institutional sales at Investec Capital Services. Mukul, good morning. Let's get a tone set for the markets as well, given what we're seeing on the global front and post the Fed meet, dovish signals coming in there. While our rally seems to be tapering out, but it could be a temporary phenomenon. What do you think?
Yeah, so there are two aspects that you touched upon. One is the global backdrop and hello. So there are two aspects that you touched upon. One is the global backdrop, and secondly is the domestic market. On the domestic front, of course, right now with elections right around the corner, that is the significant driver of sentiment flows as well as the market. And right now, the belief and the current market is suggesting that the ruling dispensation will continue. This is positive for the market because it provides continuity in policy, in reforms over what has taken place over the last 5 years, takes away the uncertainty of a new government. And that is the big reason why you've seen the rally in India. You've also the rally has been accompanied by good inflows, which has been positive the rupee. So if at least, market is expensive, so don't expect any sort of runaway rally from here like you saw in 2014. The entry levels and the entry valuations are very different. But if you sort of do see a good outcome in the government, at least that is supportive of getting cost of equity returns. That is, you will be fairly compensated for being in equities, but not overly, right? So that environment is probably okay, well set out here. On the global front, of course, there are significant events in the horizon. One is, the Brexit deal, which comes up. Most likely, there will be a solution found. That is the thinking in our company, which is with a UK-based economist. It's a significant team of 5-6 people who do work around this. The second aspect is the trade deal with the US and China, where there's a lot more uncertainty, and that is probably one of the reasons why the Fed also struck a dovish tone. The base thought now is there will be no rate increase, no further rate increase in 2019. Now, this is also positive India, and the reason is that, sort of a muddle through global economy with no rate increases from the Fed coming through is supportive of the rupee, which is supportive of the domestic economy. So in a nutshell, I think and right now I'm probably okay with the way the market is going. Not too much risk, some steady returns can be made. The stock picking is going to be key though.
Greed and fear indicator, just one of those perfect indicators where you buy when we are in fear, you sell when we are in greed, and you short sell when we are in extreme greed. Now, it's a mathematically calculated indicator which is based on FI, flows, volatility, and other aspects. So we are, according to this indicator, some may agree, disagree. According to this mathematical indicator what we have, I think we are now marching towards the greed zone more and less towards the fear zone. I also want to look at the NIFTY volatility. It's not a perfect benchmark of what the market mood is, but it's an important benchmark. Sandeep, corporate bank is where all the good news is, all the price action is, all the excitement is. ICICI Bank all-time high, Axis Bank all-time high, but how come others are not catching up? Federal Bank or a Karnataka Bank. If the corporate bank theory is so large, then others should catch up. Or this could be an indication saying that just stick to 2-3 names, don't try and come down to mid-level years.
I think that because it is a very premature stage of the rally in corporate banks, that's the reason why the leaders are hogging the limelight. In fact, it was in fact last week itself, I think Axis Bank had some broker day or something where they called a lot of
Tuesday, I think they had one. Tuesday.
And it gave
it looks like a weekend comes in between. No? That's what the Thursday holiday does to us. Ava comes to me and she said she met somebody over the weekend. I had to remind her, look, एक दिन का छुट्टी था. Holi का एक दिन का छुट्टी था. It's Friday today.
That's true.
So I think that gave an opportunity for analysts to just upgrade the target price. So most of them upgraded target price by 20%. So it was an opportunity because the stock was above the target price of most of the analysts, so they found reasons to upgrade the target price, and I think that's what will happen in many of these other stocks. ICICI, even SBI has been lagging behind because of the overall concern around PSUs, but eventually it should also catch on. Now the smaller banks will eventually start catching on. It's not that they won't, especially those which have a decent CASA ratio, but it's always after a lag, so the lag will catch up. So I don't think it's I would think that it could happen anytime. So whoever wants to take some sort of risk, they could go lower down also now.
We talk about banks in the PCA, but that's not even 30% of the total banking sector, the PSU banking sector, which is in PCA. I mean, yes, the number of banks may look like half a dozen, actually more than 10, but the number, I mean, the total quantum of the credit they have in the system, I think that number is very minuscule. So Sandeep, before we allow you to escape, just a follow-up question on State Bank of India. When you see State Bank of India has to deal with a problem like JET, I mean, they never signed up for this. The fact that they're a lender, they have to protect JET now, and it's now becoming more like a national crisis, and SBI being a government bank, they will have to put the shoulder to the wheel. It is very disturbing, because time and again something goes wrong with some company. If SBI is the lender, it becomes a fiduciary duty to bail them out, which is not right.
No, bailout is a wrong term in my view, because finally it's a good brand with a good customer experience. So if the promoters are letting go or being forced to let go, then a resolution, even if the banks come in, is not. And finally, if you look at the quantum of loans, it's not so huge. It's not like a SR Steel or Bhushan where it's 40,000-50,000 crores. It's a question of 5,000-6,000 crores, which can easily be done. And